Vincent, today Israel Corp made a big announcement. They're talking about splitting the company up. But first of all, what really is Israel Corp? I mean, what are we talking about here?
Well, Israel Corporation is a conglomerate in the very old-fashioned sense of the term. And its main asset is a big chemical company called Israel Chemicals. That used to be a state asset back in the day when Israel was a sort of pioneering state. It was privatized at the end of the 80s, and then it was gradually acquired by this billionaire called Idan Ofer, and he's the controlling shareholder in Israel Corporation. And what he's trying to do now is to make it less like a conglomerate, so he's splitting it into two separate businesses, chemicals here and the rest there.
So it's obviously a very mixed business, but why is he going to do that, and how will it really benefit?
Well, one of the oddities about this whole structure as it stands now is that Israel Corporation owns 52% of Israel Chemicals, but Israel Corporation's total value is only 70% of the value of its stake in the chemical business. So there's a whole lot of businesses inside Israel Corporation that have a negative value. I think what he's trying to do at the moment is by splitting them in two and differentiating more between the two of them, is to try to create value for this other group of businesses, which include power generation, automotive, and there's a shipping company in the mix as well. So I guess he's trying to differentiate them and make them into a more attractive business for investors.
So he's sort of separating the wheat from the chaff, so to speak.
Yeah.
Okay, and then but what's the sort of the bigger impact that this will have on the wider industry?
Well, I suppose the first thing he wants to do is close the valuation gap. I think that's going to be difficult to achieve. Actually, I'm not sure that simply splitting one in here and the rest in there is going to achieve that for him. I mean, it may do so for Israel Chemicals, but as for the other business, I'm not quite sure that it has the heft and the sort of and the revenue profile and the business profile to be a particularly attractive business. I mean, it'll be a smaller version of Israel Corporation itself, I think. So he's trying to close the valuation gap. Whether this achieves
the valuation gap with peers or with itself?
Well, with the assets that he actually owns.
MC.
So whether it actually achieves that or not, I think we'll have to see. I mean, the shares are up 10% today, but the valuation gap is about 50%. So I think there's a long way to go yet.
Okay, so overall, the plans to split could do a little bit to bump up its valuation, but it may not narrow it completely. Thanks, Vincent.